Import tariffs were meant to give Americans extra benefits and to slow down the rest of the world. However, the head of the White House is putting the U.S. economy under threat. As of March 1st, the G20 group had already introduced around 4,650 different import restrictions. Meanwhile, U.S. consumer sentiment dropped to a 12-year low, dragging the U.S. dollar down with it. Now, market attention is shifting to Friday's consumer inflation report, which is monitored especially closely by the US Fed Reserve. You are watching Traders Calendar on March 28. The trading day begins with the release of inflation data in Japan. In February, Tokyo's consumer price index slowed to 2.9%. However, in March, analysts forecast a price increase to 3.1%, and this could fuel expectations of a new rate hike by the Bank of Japan and strengthen the yen against the dollar. After that, important data will be released in Germany. The Consumer Climate Index unexpectedly fell to minus 24.7 points in March, the lowest value in a year. However, the April forecast suggests a rebound to minus 22 points. If confirmed, this shift could give the euro moderate support. A positive report on retail sales in the United Kingdom could also support the euro. Analysts expect some growth in February from a 1 to 1.4%, especially ahead of increased consumer activity in spring. If a forecast are confirmed, the pound sterling may receive local support. The pound sterling and the euro could also benefit from the quarterly GDP report. In the third quarter of 2024, the UK economy expanded by 1%, marking its best result since 2022. In the fourth quarter, economists anticipate a continued momentum with the figure approaching 1.4%, and the euro may also find support in France's inflation report. An increase in prices in the second largest economy of the Eurozone from 0.8 to 1% could signal some recovery. Although this level is still far below the European Central Bank's 2% target, and the upward trend may be interpreted as a hawkish signal, especially as the Eurozone's Economic Sentiment Index to be published later that day is also expected to rise. In February, the indicator already reached its highest point since autumn 2024 at around 96.3 points. The leading indicator for March is forecasted to hit 97 points, which may fuel further euro gains. However, the main focus for investors on a Friday will certainly be the US consumer price data, and a January inflation slowed in line with the forecast to 2.5%. Yet, analysts expect prices to rise to 2.7% in February. If confirmed, this will heighten the expectations of a hawkish rhetoric from the Fed Reserve and support the US dollar. Later, the US will release the University of Michigan's Consumer Sentiment Index. Preliminary estimates suggest a drop to 57.9 points, the lowest level since 2022, and in this case, the dollar may end Friday with a decline. It's worth noting that several speeches by key central bank officials are scheduled for the day, and their comments could considerably shift the balance of power in the currency market. Please note that the time of publications is set in a GMT plus 3. The next video review of a trader's calendar will be released on a Monday. And now we wish you profitable trading. Subscribe to our channel and see you soon.